As you know that there are more than 5,000 stocks are available to trade in the market. But as a swing trader, it is humanly impossible that you can scan all those 5,000 stocks and shortlist stocks for your swing trading. So is there any way or any method where you can scan all those 5,000 stocks and you can narrow down into few stocks, and that also within just 10 minutes? Yes, that is what I'm going to show you in this video about how to select stocks for swing trading in just 10 minutes. So if you are a swing trader, you have been struggling to select stocks for swing trading, then you should watch this video till the end, because I'm going to show you one website where you can scan stocks for swing trading based on specific criteria. And second thing is, you know that I have so many videos on my YouTube channel for day traders, option traders, scalpers, commodity traders, but I don't have many videos for swing traders. So that is why I decided from this week I'll make a video series for swing traders, and this video is going to be the first part of that video series where I show you how to select stocks for swing trading. So now, before I show you the website where you can scan those stocks, before that I have made a presentation where I show you what are the criteria you have to see before selecting stocks for swing trading. Okay, so let us see how to select stocks for swing trading and what are the criteria for this method. And the first criteria is that you should stick to stock prices which are greater than 100, because you should not go for penny stocks. Penny stocks mean which are sometimes in single digit or 5 rupees, 10 rupees and all this. Some traders, they do the mistake of going for penny stocks, thinking that if they buy 10 rupees stocks and from 10 rupees if it goes to 20 rupees, they think that they're going to make 100% profit. That means it's double, right? They think that it is easier from 10 rupees to 20 rupees, but in reality that doesn't happen like that. And the second criteria, stock should have good liquidity. What is the meaning of good liquidity? Liquidity means volumes. Okay, when there is a good liquidity, that means there will not be much difference between the bids and ask, so you will not have the slippage when you are buying or when you are selling. Now next criteria is stock should not be in upper circuit or lower circuit. So many people may not be aware of this upper circuit or lower circuit. Upper circuit means some stocks will have upper circuit and lower circuit. So that means it will have, say, maybe 5% upper circuit or 10% upper circuit, something like that. That means suppose if stock is trading at 100 rupees, and if that stock have a upper circuit or lower circuit of 5%, that means 100 rupees when it becomes 105, that stocks will go into the circuit. That means assume that either if it goes to 100 to 105 or if it falls 100 to 95, it goes into the upper circuit or lower circuit. So what is the risk in trading stocks with upper circuit or lower circuit is, when it goes to upper circuit, that means there will be only buyers, there will not be sellers. When it goes to lower circuit, that means there will be only sellers, there will not be buyers. So what is the risk involved in that? Risk is, assume that you went long at 100 rupees in that stocks, thinking that when it goes to 105 you will make profit, but instead of going up, suddenly it comes to 95 in the same trading session, then it gets into lower circuit. Same trading session, but that means 9:15 market opened, that stock opened at 100, and within few minutes if it goes to 95, and if you have taken a long trade thinking that it will go up, then what you know, you may be thinking that you can square off at 95 and you can take the loss of 5 rupees, but if it goes to lower circuit, you will not get the exit. You will not get the exit. That means there will be only sellers, there will not be buyers. So whom you will sell if there is no buyers? You will see only sellers are there in the market, no buyers. You get trapped. And next day, suppose 95, if it opens at 90, next day when market opens, again it goes into the lower circuit. Okay, to give you an example, what is the upper circuit, lower circuit? This is the stock, name is Vakrangil Limited. You can see that on this day, that is 16th March 2020, it closed at around 29.84. After that, see what happened next day. Next day, you can see that just a single line. This is a daily time frame chart. There is no candlestick, right? Just a single line. What this single line tells you that, this single line tells you that unlike other days, for example, look at these candles, look at these candles. and look at this price action. What it is showing? It's showing that next almost 7 days it went into the lower circuit. Lower circuit mean when the stocks opened at 9:15, it opened 5% lower and it got the circuit. That means open, high, low, close, all are same. So that is why you can see a single line. Okay. Next day when it opened, it got another 5% lower circuit. Next day it when opened lower circuit 5%, lower circuit 5%, lower circuit 5%, and only this day it was open for trading. That means it did not got the lower circuit, and next day also there was no lower circuit. But you can see that next 4 days again it got lower circuit, right? Then this is the one day it made a bullish candle. After that you can see that next 5 days it went into the upper circuit. So this is what lower circuit and upper circuit mean. Next one is you have to go for stocks which have a good market cap. So normally big companies will have good market cap. So you should select such stocks. Next is stocks should have good FII and DI participation. So how to know which stocks have a good FII and DI participation? Most of the time stocks which have a good volumes, so that means it has a good FIIs or DI participation. So retail traders like you and me, we can't push the stocks up and down, right? But only big players like FIIs, DIs, they can push the stocks up or down. And next one is stock should be outperformer. What is the meaning of stock should be outperformer? That means suppose assume that from last few days Nifty is trading in the sideways, but some stocks, even though Nifty is staying sideways, it is making a bullish move. That is called outperforming. That means Nifty is staying sideways, but stock is going upside. Or sometimes you will see that Nifty is in the bullish mode. Okay, maybe last 15 days Nifty has gone 5% up, but some stocks will go almost 10-15%. That means Nifty is going 5%, but some stocks are moving 10%, 15%. That is also called outperforming. Another way you will see the outperforming stocks, that means Nifty is in the bearish mode, but some stocks in sideways mode are slightly bullish. So that means what? When Nifty is going down, you will see most of the time even large cap stocks are going down. When Nifty mid cap is going down, you'll see most of the mid cap stocks going down. When Nifty small cap going down, you'll see most of the small cap stock going down. But you will see that some stocks are not falling. Nifty is falling, but some stocks are not falling. It's still holding on to it. Or even sometimes you will see that Nifty is falling, but some stocks are still in the bullish mode. That is what I mean to say outperformer stocks. So now we have discussed about the criteria for selecting stocks for swing trading. But how to select stocks which falls under criteria out of thousands of stocks? And for that, I'm going to show you one website where you can select the stocks based on this criteria. And that website is TickerTape. And TickerTape is the website where you can scan the stocks for swing trading. But remember, this video is not a sponsored video. I'm not promoting ticker tape, neither this is a sponsored video. And you know that from last 5 years, I've been doing videos on my YouTube channel, but I never done any sponsored video. Even though I get so many offers from third parties to make sponsored videos on my YouTube channel, but till date, I never done any sponsored video. So this is also not a sponsored video. So now we'll go to the ticker tape website and we'll put all the criteria which we discussed now, and based on that we'll filter out the stocks. When you type ticker tape in Google, you can see that this is what you will see. Click on it, and once you click it, this is how the interface looks like. So once you log into this website with your account, then you can go to the screener and you can click the screener, and this is the page you will get it. Then go and click this start screening. So now first thing what you will see that you can see that there are 5,267 stocks it is showing. So is it possible that you can manually scan out of 5,267 stocks? It is not possible, right? For that you have to put the filter. First thing we said, stock price should be minimum 100 rupees. That is what we discussed in the criteria section. So I typed 100 rupees here, and once you have typed 100 rupees, you can see that from more than 5,000 stocks, now it is showing only 2,428 stocks. And now next one we have to see market cap, right? Market cap, I will put 1,000 crores. That means it will show me only the stocks which have at least 1000 crores of market cap, and you can see that now we have narrowed down it to 1211. So now next we discuss that we should shortlist the stocks which have a good liquidity. For that we have to see the volume, right? So you can click the add filter and you can go and check the daily volume, and daily volume you have to mention how much you want to put it. I'll put 1 lakh. So that means stocks which have at least 1 lakh volume, that only will come into your scanner. Now you can see that from earlier more than 5000 stocks, it is showing me 896 stocks based on our criteria. Now still we have couple of filter to put, and that one is we have to see the stocks which are away from 52-week high. So why we have to put this? We have to put this to know stocks which are outperforming. Normally outperforming stocks mean which are trading near the 52-week high. Okay. So here you can see that percentage away from 52-week high. So you can put 5 to 10%. For this video purpose, I will put 5 to 15%. So it will show me that in the currently which are the stocks which are trading close to 52-week high. So that means now you can see that we have 46 stocks which are around 5 to 15% close to 52-week high. And the last one of the way to know which stocks are outperforming compared to Nifty, for that you can go here 1 month return versus Nifty. So here also you can put stocks which are outperforming compared to Nifty from 5 to 15%. So now you can see that we have narrowed down from more than 5000 stocks to just 15 stocks. So these are the 15 stocks which you can see here now. Currently, they are outperforming compared to Nifty. Second, I said, which is minimum 100 rupees or more than 100 rupees stocks. So these stocks are 100 rupees or more than 100 rupees. And next one I said, stocks which have a good volume. These stocks have a good volume, and stocks which have a good liquidity and which are currently trading near to 52-week high. And if you come here and you click this arrow, then you can put it in the ascending or descending order. If you want to shortlist based on market cap, you can come here and you can click here. If you want to know based on 52-week high or low, you can come and you can click here. And daily volume, if you want to see which stocks are getting good daily volume, that also you can see it. Okay, now before we start with the some old chart example for the understanding, let me just brief you what we discussed. That means if Nifty is going down, then we should look for the stocks which are either staying sideways or slightly bullish. We should not look for stocks which are also going down. And second thing we discussed that if Nifty is trading sideways, then we need a stock which is going upside. That is what known as outperforming, right? And third thing is that if Nifty is already going up, then we should look for a stock which is outperforming. Outperforming mean if Nifty is going by 5% in last 1 month, then we should look for something which is stock which is going maybe 10 or 15%. That is the meaning of outperforming Nifty. So now we'll go to the chart and we'll see some old example when Nifty was underperforming and stocks were outperforming. Okay, now for this concept understanding, I've taken one of the old example of Nifty. I've taken the example of December 2022 because from December 2022 till somewhere March, Nifty was going in the bearish mode because 20 MA is sloping downside. Before that, it was in the bullish mode, but December 2022, it started its bearishness till March 2023, Nifty was going down. So that means what we should look for? Outperforming mean that stock trading near 52-week high and it should be outperforming compared to Nifty. That means if Nifty is going down, then that stock at least should stay sideways, because what is the concept here? Whenever Nifty start recovering and start going up, then you will see most of the time those stocks which are staying sideways, they can suddenly start going up when Nifty start picking up. Okay. So that means stocks are not going down, means stocks are holding on to it. There is a big buying interest in the stocks, not only from retailers, even maybe from FIIs, DIIs. That's why that stock is not going down. Now we'll start checking the stocks. Okay, let us go to ACC stocks, right? You can see that from December till March, you can clearly see that ACC stocks was going down. Let us see the next one now. Adani Enterprises. Adani Enterprises also, you can see that from December 2022 till March 2023, that was also going as per the Nifty. Now this is the Adani port. You can see that Adani port also going down. It was following the Nifty trend. The next is Ambuja Cement. You can see that even Ambuja Cement also going down during the same time when Nifty was going down. So that means all the stocks were following the Nifty trend. Next is Apollo Hospital. Apollo Hospital also, you can see that from December downtrend started. It made a one big move, but again downtrend started in the March. Okay, next look at the Apollo Tires. This is our candidate for outperforming stock. March Nifty is going down from December to March, and Apollo Tires, you can see that it is not bullish, but it is staying sideways, right? It is staying sideways, unlike other stocks. Next, what I said, you have to see where is the 52-week high. So where is the 52-week high? 52-week high is here, all right? In the month of March, if you see that 52-week high, because if you go 1 year back, you can see that it was down. So that means 52-week high was this. So we'll mark that 52-week high and assume that we are trading in the month of March. Once you have shortlisted the stock, out of these stocks, you have seen that Apollo Tires is outperforming Nifty. That means Nifty going down, but Apollo Tire is not going down. So how to take the trade now? Suppose you are in the month of March, then see where is the resistance. You can see that one big resistance is this candle. So this also resistance. This candle went above it but could not sustain it. So what we'll do, we'll mark both the lines. Apollo Tire is showing you that it is outperforming. That means your objective to take a long trade, not to short these stocks. Okay. So because it is outperforming, not underperforming, in that case, you have to go for a long. So if you know price action, when you take a long trade, one time you will take a long trade. If there is any resistance gets broken, that means if there is a breakout, that is the one way to take a long trade. Or another thing is that pullback. So what is the pullback? Pullback means if it goes up and again it comes down and takes support somewhere, that is what known as pullback. So what we have to do now, one thing we have marked, this is the resistance. That means once it breaks, that is our long entry. Another thing, if you are looking for a pullback, see where is the support. I can see here clear support here, clear support here. 2-3 times price came here in Apollo Tires and took the support. So what we can do is we can go and mark the horizontal line if you are looking for a pullback. So we have marked this line. So that means being a swing trader now, you have already identified the stocks which have a potential to give a big move. And next is, in the live market, it's not possible that you can keep watching the chart where it is trading everything, right? Once you have marked this level, what you can do is go to the right and click here, add alert on the horizontal ray. You can click here and create. So once you click the create, there's a small clock symbol. So that means you have put the alert here. So whenever Apollo Tires breaks this resistance and crosses above it, then you'll get the alert. Or if you want to take the trade based on the support, then you can right click on that horizontal line, come here, add alert on horizontal line, click the create. So you can see that we have created alert on the both side, on the upside or downside, and you don't have to keep watching the chart every day. Once you have created the alert, it will give you the notification. So that means you will take a long trade if this resistance breaks, or you will take a long trade if price comes here and takes support for a pullback. So if you are a pullback trader, then you will wait for price to come to the support. But if you are a breakout trader, then you will wait for the breakout to happen. And you can see that this is where breakout happened. So it did not give a pullback here, right? But it made a breakout here in this candle. And after that, it kept on going up, all right? So that is what known as selecting the stocks based on the criteria, whatever we discussed, then going to the chart and marking the levels, important resistance and important support. That means if it comes back to the support, that means it's a pullback entry. If it breaks the resistance, that means it's a breakout entry. Okay. And remember, this is just for illustration purpose. This is not a recommendation. So that's why I taken the old chart of year 2023. Okay, now before we wind up this video, few rules you should know that stop loss is mandatory. This is not a holy grail. There is no holy grail in trading. Ensure that you keep the stop loss so that if the trade goes against your direction, you have an exit plan. Next is keep at least 1:2 risk reward. That means whatever you risk in every trade, keep your reward as double of that. Next one is important, that method what I have shown only for swing trading, not for investment. Okay, don't get confused. This is not a investment tips. Security is shown here only for illustration purpose. Whatever the couple of stocks which I have shown you in the trading view, that is only for illustration purpose. This is not a recommendation. Okay guys, you have seen that how out of 5000 stocks we have narrowed down to only few stocks, and we have shortlisted that stocks and we have put it in the watch list. I'm not saying that this is the only method to select stocks for swing trading. There are many other ways also, but in this video, as a part of swing trading video series, I decided I show you one of the method to select stocks for swing trading. So that's it guys about this video. I'll come back with second part of this swing trading video series. Until then, bye and take care.